Hello traders and welcome to another video review. Today is Monday, January 2nd, 2023. Let's find out what is going on the Forex calendar today. As you can see, not too many data are scheduled for release for Monday. Nevertheless, we got PMI data from Switzerland scheduled for release at 9:30. We got German manufacturing PMI scheduled for release at 9:55, and then of course manufacturing PMI data from the Eurozone scheduled for release at 10 o'clock. So plenty of our today's analysis will be connected, of course, to the Euro. So let's find out what is going on the Swiss franc. Daily time frame chart of the Euro to the Swiss franc looks as it is right now on the chart. What do we see here is very typical for this market. We got technical resistance around the parity level, and then just below here there is another technical resistance. 9,954 is the level. The technical support is located at the level of 9,713, and as you can see, we got this horizontal trend, this consolidation just around the level of 9,900 pips. Local consolidation high is 9,923, and the local low right now, the intraday technical support, is 9,860. So this is the internal technical resistance, technical support, but please notice that we are still trading above the 100 days moving average. So the moving average will act as a technical support, dynamic technical support for the market on a daily time frame. It's worth to notice that the market managed to retrace 50% of this wave down, because we hit the level of the 9,954. This is exactly where the 50% of the Fibonacci retracement is. So the situation right now is really negative for bulls, because they managed to retrace only 50% in three ways, A, B, C, to the upside, right? So if we want to resume this movement to the upside, of course we need to break above the resistance, break above the parity, and go towards 61% of the Fibonacci retracement located at the level of 1.0097, so almost 100 pips above the parity. Momentum bouncing up and down around the level of 50, so it doesn't show us any kind of a direction. It's not surprise, because we have this horizontal trend here on the chart, and we have this horizontal trend here on the RSI. Nevertheless, because the market managed to retrace only 50% of the recent wave down, the outlook remains bearish. Let's find out what is going on the euro dollar, because of course the data from the Germany might be very important for the euro dollar traders. We got this technical resistance here, as you can see. 1.0787 is the level of the technical resistance on a daily time frame chart. The recent high was made at 1.0737, so it's only 50 pips away from the there you go, from the technical resistance. So what we have here is another technical resistance. Swing high will now act as an obstacle, as a barrier for the bulls. The recent movement to the upside looks very bullish, because this is the daily time frame chart local trend line, and according to this trend line, according to the chart, the market is trading above the trend line and is trading above the level of 50. Apparently is trading above the level of 60 most of the time. So the momentum to the upside is still very strong, and the market clearly wants to move higher, clearly wants to move towards the next level, of course, the level of the swing high from the May 13th, so the last day of the May, is the next target for the 2023. Nevertheless, it looks like during the last 2 weeks the bulls didn't have that much momentum on the lower time frames, and we are of course trading still below the recent swing high from the 15th of the December last year. The key technical support in that situation might be seen somewhere around the level of 1.0369, which was the high last year August, and this level of course was again support for in the middle of the June 2022. So we are trading above the 100 days moving average, which is a good sign. We are trading above the main technical support, another good sign. Good indication is that we are trading above the short-term trend line, not a problem, and the momentum is positive, okay, and it's strong. Nevertheless, it's been above the level of 60 for quite so long, and we still didn't make any kind of a breakout attempt of the swing high at 1.0787. So please notice the fact that we might start some sort of the correction to the downside sooner or later. So it doesn't look that good. It doesn't look that much positive for the euro dollar, because despite all of this effort, all of this technical situation, the bulls are still not able to trade higher. They are still hesitating, they are consolidating, and they are not attacking the higher levels. So maybe today's data will trigger some kind of a movement. We will see very, very soon. That was the euro dollar, and let's just quickly take a look at the crude oil market. The crude oil on a daily time frame chart is trading below 100 days moving average, but what I would like to mention is that just recently we got this doji pin bar at the end of the ABC movement to the upside. Of course, we expect a deeper pullback, deeper correction lower towards the even $74-73 per barrel. Nevertheless, the local low was made at 76.80, and today we have a very nice upward movement. We are challenging this local technical resistance located at the top of this doji bar, which is 81.17. So that's the intraday technical resistance. And of course, the next target, the local targets for bulls are 80 to 70. Okay, that's the next technical resistance, and of course the next level is 83.33, which is the high from the 1st of the December 2022. So if we challenge this high 83.33, the market might make a new yearly high, so and above the last month's high, because that's the December high. This is the 1st of the December. So that's everything, that seems to be a good situation for bulls. Nevertheless, please notice the fact we are below 100 days moving average, and if we zoom out, we can clearly see that this moving average is giving us plenty of clues regarding the current situation. We might again go a little bit higher towards 83.33, $84 per barrel zone, and then be capped just like it was here. So please pay attention to the current situation on the crude oil. The momentum is positive, 55 points. Nevertheless, we are approaching the recent high and of course the monthly high from the December 2022. If we break it, there is a chance to test 100 days moving average, but we still trading below this moving average. We need a strong breakout in order to rally higher. Otherwise, the market will sooner or later start to reversing lower, and this short-term movement to the upside, which is still in three waves only ABC, might be a first confirmation that the market might reverse in the longer time frame chart. So we should expect the levels of 77, 75, and then even $70 per barrel of the oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.